Hello and welcome to ATFX's Core PCE Price Index data preview. Bit of a long-winded one that, but very, very important for markets. Now, as most of you will be aware, financial markets are still heavily influenced by geopolitical updates. There's been more into the start of this week. Trouble between the US and their closest neighbours and allies, Canada. Plenty going on in the Middle East, but focus will, towards the end of the week, turn back to fundamentals where we've got this key US data out, and that's backed up by the big central bank symposium in Jackson Hole, Wyoming at the end of the week. So plenty going on this week. But the main feature on the data front, especially from a US perspective, is going to be the Fed's favored inflation indicator, the Core PCE Price Index. Now, it has been coming in relatively steadily on expectations recently, but if we do get even just a 0.1 difference in that expectation in the month-on-month data, expect markets to fly and to fly hard. So what we're going to have a look at in this video is going to look at what we're expecting from the numbers and how they could affect some of the markets and the big movers. We could see some big moves in euro. We could see certainly a big move in dollar yen. And one of the big movers in the market, it's been a little bit quiet about it, has been gold recently. It's broken out of recent ranges, and this data could really either extend the move or see us move back into recent ranges. So plenty going on. Right, so let's have a look. Why are we looking at this number? And I should mention before I go any further, if you haven't subscribed already, subscribe to our channel. We'll try and keep you up to date with everything that's going on in the market. So Core PCE Price Index. It is the Federal Reserve's favored inflation indicator. It is what a lot of the Fed members are referring to when we read the minutes and we hear how they're looking at inflation numbers. So important data that's come before this. Non-farm payrolls, of course, at the start of this month were much worse than expected. CPI data was pretty much on expectations, but PPI came back down lower. So that has led to a decrease in Fed rate hike expectations. At one point in the last few weeks, we're expecting a 60% chance that we would see a rate hike in September, and that is getting closer this next meeting, of course. It is now down to about a 40% chance, 42% chance, he said, just checking the data, that we will see a 25 basis point hike. So it is going to be a live meeting. It feels like it's going to be a live meeting. It could be a massive event coming in just a few weeks' time. 16th of September is the actual date we're looking at. And this data could go a long way to seeing how the Fed are going to move at the next meeting. So what are we expecting? Month-on-month data, we're expecting a 0.2% increase. Now, last time out, that was just 0.1, so it is creeping higher. For the year-on-year number, it's expected to remain about 3.2%. Now, there's some estimates that are all the way up, and this always happens with the big data. Could be all the way up 3.7, 3.6%. That is still very, very sticky, and that could see us really ramp up these rate hike expectations. The key headline is going to be this 0.2 number. We come in at 0.1 or 0, we're going to see the dollar smashed. We come in at 0.3, 0.4 especially, the dollar will be lifted massively. Yields will go higher, not to the delight of the Treasury, it has to be said. And we'll see some massive moves in the market. So that's the state of play coming in a few sessions' time. Let's go and have a look at the few of the charts where there could be some really good trading opportunities. And so here's the Euro daily chart. Most of you will have seen that we've had a break higher. We've had a break higher after that weaker data that we've been talking about. So last week was pretty much weaker US data across the board. Those CPI followed by the PPI, which was weaker, and then even retail sales and consumer confidence was lower. We saw a break. I can just bring you in to show you where that break came through. We'll just bring it in there. A break up through here. Good break trade, let's be honest. Broke up around about 116.20. We've seen a high up here around 117.10. We're back kind of in the range. We've moved the trend line up to that level. Really, it's going to be on those highs. So great trading opportunity. A weaker number should see the euro fly higher. So that 0.1, certainly the 0, will challenge this resistance level, which is pretty much on these highs. There you go, 117.11, 117.10. A break higher through there does open away. We'll probably hit 118. I say that because we had this agglomeration of highs here, and then we've got that high there, 118.50. But really, from a technical perspective, it opens the way. It will probably see rate hike expectations fall all the way down, probably to around 20% if we hit that zero number. Now, the opposite side of the equation, of course, stronger numbers, a 0.3, a 0.4. We're going to see the dollar lifted. That's going to see euro hit. Now, this is actually quite a good trend line. I've only recently just drawn it on. It's not too far away, and it coincides with that 200-day moving average. We're about a day away, so they're probably going to be about the same level. 116.31. We're only trading 30 points higher than that at the moment. Could see a breakdown here, opens the way back up into this area down here, probably back down to 115 fairly sharpish. So good trading opportunities in the euro coming up on that. We're going to go and have a quick look at dollar yen now. So here we are on the dollar yen chart. As most of you know, intervention has increased volatility despite what the central banks tell us. Massive moves here, huge moves when the Bank of Japan came in and when the Fed helped them out later on. We are back kind of in mid-range now, aren't we? So trading about 159.22 at the moment, 200-day moving average, about a big figure lower. Resistance, because we had such big moves on the intervention, we're probably going to look first initial resistance around about this high, 160.87, and then you're all the way back up at those multi-decade highs. So trend line now coming in a little bit lower, 163.57, but there's the high, 163.98. So again, stronger number. A 0.3 probably takes us up to these highs fairly sharp. It's a 0.4 probably opens up moves up here. We could see intervention if we're starting to hit those 160s again. Could be a very volatile time for dollar yen. Favouring the Bank of Japan's view and the Federal Reserve's. If we get a lower number, then we're probably going to trek back down into these. So 0.1, we're probably going to be back down towards this 200-day moving average, and then a zero opens the way back down towards these recent support levels. So massive trading opportunities in dollar yen. I would suggest that one, especially if it's topside, that you've got to manage your risk very aggressively, because we have got that danger of intervention coming through. Right, last but not least, and probably one of the more interesting potential we've got now coming up, gold chart. Okay, and here's that gold chart to be familiar with if you've been watching us for a while. We have had consecutive breaks to the top side. It's actually traded very nicely from a technical perspective. First break from down here had a multiple lows around these, just around and underneath the $4,000 level, punching up here. And we've seen it just increase really bid on dips all the way through. The recent move we got, and it kind of came on the back of the weaker PPI and increased geopolitical uncertainty in the Gulf, was the breakthrough. This trend line that we had here, it had held a few times there, took us up to the 200-day moving average. Kind of, and I'll bring this in for a little bit more in-depth viewing, kind of retraced perfectly to the former resistance trend line, and then went again. And the break through that 200-day moving average, as you can see, that was nearly a 2% move on the day. We're now up to, we've topped out just underneath 4,700. So firmly in an uptrend. But could this PCE number change the direction? And it will move on the back of the dollar on the number. So higher number, we're going to see the dollar bought. That should bring gold back down. First stop will be the 200-day moving average, 45.18 at the moment. And then you're probably looking for these lows here, as I said. That's the form resistance level as well, around about 44.50. Next level up there, the lows down here about 43.20. Top side, a weaker number, and this is where it could get very interesting. We've not really got too much on the technical side of things from a trend line perspective. Yes, this high here, there'll probably be another one in place or close to by the time. So we're going to look back for these highs here, 47.70. We've got another one here, 48.80. But really, it does open the way probably for a move back up to the next key psych level, which is 5,000. So great trading opportunities in euro, in dollar yen, and in gold. It's all going to come down. The big move, the first move will come at that month-to-month number, and then look at the year-to-year for those longer-term plays as well. So great trading opportunity coming up. If you need anything from us at ATFX, please let us know. And thanks for tuning in. Cheers.